Wednesday, January 8th, market analysis. Stan Ehrlich, good morning. I'm a little early today for a change, 9:30 California time. Usually it's closer to around 10 o'clock. And first of all, anybody in Southern California, LA area, hope everybody's okay. There's got now 4 wildfires going because of the Santa Ana winds. Terrible situation. Very bad news. All right, enough. I usually start out with market analysis. My daughter lives down in that area. That's why I'm mentioning it. Okay. Market analysis, and we start out with stock indexes, go to futures, and I'm going to talk a little bit about the Santa Claus rally when we get to the S&P. So the E-mini bouncing back a bit this morning, and right at the moment, well, I'm sorry, not bouncing back, slipping off fairly quickly, as a matter of fact, in the last few minutes. Down about 3.5 points below yesterday's lows, but it is around the lows, most of them, that happened only a few days ago, which held very well, and some so important lows in the past several months. So this is a support area, but we're not oversold. I'm still expecting the market to turn back up, but if we close below 58.75 on the E-mini, we will be starting to make new lows of significance and a downside breakout and a perpetuation of the top that happened in the early part of December. So that will cause me to look for a move down to probably 57.11 and maybe even lower to 56 and a little bit below 56. So that's fairly significant. I'm not expecting that at the moment, but I will say if we get a downside breakout, I'll be looking for lower levels. Right now, I am expecting the turnaround to start to rally, but it hasn't done that yet. So don't jump the gun. We've got the 1-minute E-mini chart, and I am going to change all these 1-minute charts to 5-minute charts in a moment here, just so I can get a longer term, a little bit better perspective, but still only in the last 2-3 weeks of data, but at least 5-minute. So we made new lows for the day and the previous day and the previous day, but around where it's held before recently, as I said. So looking for a turn back up, but it hasn't happened yet. I have been, and I might be wrong again. So it's an opinion. Now, also new lows in the spider, as you would expect, not quite as close to making more bearish downside breakouts. But if the E-mini is going to do it, then the spider is going to do it also. Obviously, they're basically the same, minor differences. And I'm looking for a market turn back up again, looking for the short term, and that's a little too tight. There we go. Turn back up on the spider, coming down pretty quick. Support still a bit below the market. Not sure about this, but once I get a good enough rally, which would be making new highs for today or the last day or two, I need to close really above 600 on the spider in order to feel a lot more confident about this being a bottom that had formed, past tense, and not being too concerned about it, a little bit more of a downside correction, which could take us into the end of January. Next, we've got the QQQ. Same situation overall, just looking for it to turn back up. Could do so, but I'm not getting a lot of help from a lot of other indicators like I often do. So I'm a little concerned that this thing could still keep dribbling off and break out to the downside and therefore cause a bit of a larger break than I was originally expecting. Again, that might last for the next 2-3 weeks, the end of the month. Next, we've got the QQQ 5-minute chart, and it's coming down toward support as well. What about the NASDAQ futures NQ at a thin layer of support? Not really enough to do the job, in my opinion. It's this couple of lows here at 29.95-ish. Stands a lot better chance to turn it back up, and it's already done it twice. Now, a little bit of a triple bottom is fairly rare, but they happen. We might not even get there. So we got to watch very carefully how these slightly lower levels from where we are now hold if they're tested, or not hold, and then create a bit of a further downside correction. If we turn around and hold, then I'd be looking to take out that high at 21,890, and for the NQ, that one at 22,123, and the highest high for the historic highs. Next is the NQ 5-minute chart. Minor new lows here for the day, new lows for 3 days, coming back to some support. Now, the Dow, much closer to important support, which did hold, but that doesn't guarantee. The highs are lower. The market's got flat bottom. I don't like that. It's called a flat bottom right triangle. Usually on those formations, the flat side is the one that's broken. So I'm a little concerned. 5-minute chart, not really showing any signs of turning back up. We've got Russell in a support area, close to being oversold, but not quite. Also the same condition as the other indexes, as you probably would expect. Okay, bonds. I have erased the double shoulder, head and shoulder bottom that seemed like it was forming, excuse me, over a 2-year period. So that's gone. We made too many new lows for too much time, bounced off of the low we made on November 18th, but it didn't stay strong, hit resistance, got overbought, ended up making new lows again. Not good. Now, true, we're oversold. True, we're getting close to a profound, important low back in October, a little over a year ago, that could generate a very, very broad double bottom over a year in length, year and a third, give or take. But it's still going to get down quite a bit more than it is now. It could bottom out any old time because it's oversold, but I've got only that to hang my hat on at the moment. No particular support area, no particular formation, no particular anything but a previous low at significantly lower levels back in October. Notes are beginning to do the exact same thing the bonds have done. But support is holding. The formation is still intact, but barely. So let's see if it can hold on. One moment. Trying to get rid of this cough. All right. So if it makes new lows in notes, especially in a closing basis below today's lows, I'm going to have to remove these markings, the annotations, to point out the head and shoulder bottom, because it will just fail too badly for too much time and go in too low. This is my last chance. Bonds already ruined it. So I do believe interest rate futures are developing some sort of long-term bottom, but it's going to take a little more work in this time frame and in this price range in order to do anything significant and form a bottom. Next, crude oil is almost generating an outside down ER sell signal that's going to turn the yellow bar for today's price action red. All it has to do is get below by one tick or more, 73.11, and the low today so far is 73.23. Very close. And we are 73.34 at the moment, so a little bit more of a dip will create a major sell signal, overbought conditions, and a major bear trend line, almost exactly the same thing that happened back here in late or early October, October 8th, and produced a fairly decent move down over a few weeks. So I think it's going to happen today. I think we're going to get a sell signal. Guess what? We just did today in heating oil. Brand new sell signal today. Now, low and last, below the lows of the last 3 days, overbought conditions causing this reversal. Looks very similar, not quite as big as October 8th. I think we're going down at a minimum, and we're awful close already, 2.3131, but probably to 2.2763. And I cannot rule out something in the ballpark of 1.18, 2.18, and even 2.13. That's the biggest support area we got is down to 2.13, and we might get down there again. Natural gas had a bearish engulfing reversal yesterday. So all of a sudden, all these energies are starting to turn down. Momentarily, we have a little rally, but that was up to the middle or a little higher in the middle of yesterday's range, allowing ER3 to get short. So we've got a sell signal yesterday that looks good. I would consider being short the natural gas. Probable stops above yesterday's high at the highest. If you start to see it slip and start to make lows lower than today's low, which is almost the same as yesterday's low, then you're a little too late. So we'll see what happens here. But I'm certainly looking for this to start to head south. How far? Well, now the head and shoulder bottom that got all the way up to 4.2 almost. I wonder what was the exact high. Yeah, 4.201. So it got up to 4.2. And it was supposed to get all the way up to, for the minimum upside objective, 4.4 and a half. And it didn't. And I don't think it's going to now. I think this was an upside exhaustion gap several days ago. Overbought, hit resistance, and now we have a sell signal yesterday. So if this sell signal fails and we get above yesterday's high, a different story. But of course, I've got to trust my signals. The ones that work really, really great. And the ones that don't, you lose some money, and it's not too bad. That's the whole name of the game. You're going to have losses, I guarantee it. How you handle those losses is critically important. Money management. As well as, handling the profitable trades effectively. Also, don't let your big profits get to small ones, for example. All right. Looking for new lows, natural gas. Looking for the head and shoulder bottom to fail. Looking for the neckline around 3.3 to get broken. And I'm looking for a move down, probably in the ballpark of 2.8, and could be even a little bit lower. As soon as we get below the neckline in the next few days, I will erase the markers, annotations for the shoulder, head and shoulder, and the neckline, and the other affiliated stuff, because the pattern is just completely ruined. There's a small chance the bearish engulfing signal yesterday won't work, and we could keep going up. But I can't agree with that at the moment. Okay, gold, silver, platinum, copper. Gold made a minor new high, is not holding it, is a little lower on the day, but not overbought. We're not going to get any sell signals. All I can say is this head and shoulder top in gold, silver, and platinum that I've been talking about for weeks and weeks now is not doing what it's supposed to do. This, since December 19th, 3 weeks ago, slow move sideways to higher, shouldn't be there. We should have started to slip even more in the last 2-3 weeks, all the way down close to the neckline and maybe even break out. So very soon, I'm not sure exactly how many more days I'm going to hold on to this pattern idea, but very soon I'm going to have to erase the shoulder markings, the annotations for the formation neckline, and go back to the drawing board to some degree. I still think gold could be topping out longer term. That's about the best I can say at the moment. Silver, same pattern, got the shoulder high if it's a head and shoulder top with a bearish engulfing, but one way or the other, it's a bearish engulfing, and I got a turning point. That's the important thing. Will the pattern work out correctly? It's like gold, except this already got the neckline broken and a second attempt, and it didn't work. I'm sorry, this is a little more serious because it actually started to work. So same thing like with gold, I'm going to have to erase the annotations and kill the pattern and go back to the drawing board for silver. And what about platinum? Well, I don't have a pattern. Everything's gone here. Yeah, we had two fantastic top with the ER signals, bearish engulfing on that high, May 20th, exactly. Great signal. Also, another great signal, October 30th. Nothing lately. I think this rally could come up a little bit more. Resistance has now been surpassed. We're staying above it at the moment. We're not overbought. Not too far away, but we're not overbought. So I'm looking for a little bit more strength. Hard to tell here. I may be up into the resistance area, which I should drag over to the right. Sorry about that. Keep a little housekeeping going here. Okay. Copper. New high and last for a month, almost. Got oversold, got down to a support area, broke it slightly for a day or two, and then just jump right back very nicely. I think we're going to go up at least to these previous highs in the ballpark of 4.3, 4.35. And I can't rule out coming back up into this yellow resistance area, which would be 4.4 up to about 4.5 and a half. So I'm short-term friendly, a little bit bullish. But what do we got since July, August, probably? A lot of sideways. The one good thing is the support area, which is pretty profound, has held pretty darn well since summertime. Next, soybeans, oil, meal, corn, wheat, then cattle, hogs. And then I got a stock for you. And then we'll see how the E-mini's doing. The soybeans, a little bit of a bounce today. Certainly nothing to, celebrate. Mostly it's got this trading range that it broke down out of to the downside, got oversold and popped right back into it again. Once it started to work its way a little bit higher, it couldn't do it, couldn't hold it. All of these highs for way over a year have been at lower levels over a significant amount of time periods, and we just can't seem to get a long-term trend up started. But don't lose the faith. It's very, very cheap. There is a possible double bottom. Maybe too premature to say so. And we're not too far from some major bear trend lines, but if they're broken and you start to close above 1050, let's say, then you've got something to talk about. Long-term bullish. Until then, sideways, back and forth, bearish tinge to it all. Next, soybean oil, long-term bear move, bearish tinge to the whole thing. We had one rally that got into new high ground for many months, but it didn't stay there. Got a sell signal on the top of the market on soybean oil. Come on. And dropped all the way down to where we're now trying to move out of slightly last day or two. I don't know. These grains have been very choppy, very difficult to predict. Intermediate to longer term size swings. We did have a buy signal almost at the exact low a couple of weeks ago. That's proven to be okay, but it really took longer than you would expect for it to start to work, just starting finally yesterday. And how much is the rally if we get it? And I think we could get a small one. I'm up to 42.50, maybe up to 44.20. And I can't rule out something higher than that. But once we get above 44.20, 44.10, then we're talking about something developing on a longer term bullish basis, sort of. We really have to close above 49.60, call it 50 flat, in order to get a long-term bullish situation developing. Now, the next one here is soybean meal. Kind of the opposite. We're back down to a minor support. Market's holding. I expect it to turn back up again because we're at support, but that remains to be seen. Next move is in corn. Sideways. Tops are all about the same. Looking for it, frankly, to fall back down again. Overbought just a few days ago. Sell signal a few days ago. The signals aren't catching. The top is not proving to be good so far. Need it closed at 448 and lower. Just a little sideways here lately. Next, we've got wheat. Looking for a move lower. What can I say? We have new lows for many months, multiple years since the war began. And I got nothing. I don't have any optimistic thing to say to speak of. Only if we start to close above recent rally highs. Above 555 is just barely the start. It could be very interesting if we get above 570. But the real breakout to the upside is way up here at 636. That would be a long-term bullish signal. And I'm afraid to say we're very close to the lowest lows, nowhere near a bullish breakout. Bear trend lines seem to be dominant. Basically, we're hovering around a bear trend line, a little above, a little bit below. So will a double bottom form? Stay tuned. Cattle. Got overbought 3 days in a row. I expected it to turn down any old time. That's what I said yesterday. So today we're wiped out yesterday's low, the day before that, and matched the day before that. So all 3 of the previous trading days now are equal or above today's low, and most of it above the current quote. So it looks like we have topped out. Unfortunately, we didn't get a higher high than yesterday's high. Today, we would have had a bearish engulfing, which I still think could happen in crude oil. All right, now, and I got to point out in energies again, we have sell signals all over the place there in energies. Heat, unleaded, crude, almost crude. So cattle, looking for a move down, 191.20 and 189.60, and even down to 196.30-ish in the next few weeks. Hogs, opposite situation completely. Oversold, nearing the bottom of a support area. Currently, we do have a lower low than yesterday, oversold in a current tick that's higher on the day. It wouldn't take much in order to get a rally above yesterday's high, generating a green bullish engulfing ER buy signal, but it hasn't happened yet. Let's see if this thing turns around. It looks like it's trying to, but don't jump the gun. SQ is a stock, now dropping down with the indexes, challenging recent lows. My minimum downside objective is 82.70, and it might be a little lower than that. It had a head and shoulder top that was okay. Seen a lot better examples of them. But there's nothing wrong with the breakout on the downside. Big, fast, furious, large volume, that kind of thing. Rallied back toward the neckline a couple of weeks later, a few days ago. Didn't break it, stopped, turned down almost a new low again. That's the way they should act in general. Looking for a little bit lower levels. But long term, SQ, what I do, has a major long-term bottom for 2 full years. So that is a major long-term breakout, bullish breakout. And it kind of depends just on how much of a dip down into support, which it started to do already a couple of weeks ago, we're going to end up getting, because I think it's going to hold probably well above 80, but I had talked about 82 something, 82 and a half, because that's the downside objective on the pattern. Let's take a look at the E-mini, see what's going on here. Just made a lower low for the day, bouncing back a little at the moment. Nothing particularly significant. If we can turn around and start to get above 59.80, let's say, that would look really good for some sort of a reversal. But I'm hoping for it, but you don't trade on hopium. You have a great day and profitable trading to you. Bye-bye.